All right. Hello and to another Chat and Learn here with Power to Fly. My name is Mariella Marie, and as always, super excited to roll into this next hour with you all. We are switching to a new platform. I don't know if you all have joined a previous Chat and Learn with us. Hopefully you have, but you'll see that some things are different. So before we go through our session today, I'm just going to go over some housekeeping rules so that everyone feels comfortable and confident in this next hour. I know that we are touching on a really big topic here that I know you all have some great questions to dive into. So I just want to make sure everyone feels comfortable and confident in this next hour. With that said, we'd love for you to participate. And I see that some folks are already writing in the chat box. Let us know where you're calling from. You can write in the chat box. Let us know where you're calling from or anything else that you want to comment on. We'd love to hear from you. You can write your questions in the Q&A section. You'll see that I've already put some questions there. So if you see something that you're interested in, go ahead and give it a thumbs up. The more questions that have the upvotes, I'll go ahead and make sure to prioritize them so we get through those before the hour is up. And because we are moving to a new platform here on Bevy, it's not like Zoom, so you can't just come off of mute and come on camera whenever you'd like. So, but I do want you to participate. So with that said, please put a +1 in the chat box if you'd like to come off mute at any time, and I will give you rights to do that so that you can share your voice and share your face with us today. If you do come off mute, you will be featured in our live recording, and this is being recorded, so we'll send you all an email with all of the rewatch information afterwards. So you can click on the links that our guest speakers are speaking about today and then rewatch it and take notes at your leisure there. If anyone has any sensitive information and you want to be kept anonymous, you can find me by direct messaging me. You can find me in the chat box under Mariella Marie, direct message me there, and I will raise your question anonymously to our guest speakers. And just want to go over a little bit of information about me. If you have not been on a chat where I have moderated, it's a pleasure to virtually share space with you today. I am currently living in Patagonia. I'm originally from California, and I have been working with diverse technologists, independent artists, and divergent innovators for a while now. I put a decade on here, but that really makes me feel quite old, actually. But hey, I guess you got to toot your horn whenever you can. So I'm really excited about speaking about emotional intelligence whenever we can. So I know we're talking about taxes today. So I just kind of throw that out to our guest speakers. If there's a way we can throw emotional intelligence in this conversation, that would just make my heart shine today. And then I would love to connect with you on LinkedIn. So you can find me on LinkedIn, and you can go to thepositiveforceteam.org to see the current projects that I'm working on. So with that said, I'm going to pass the mic to our guest speakers, Taylor and Evan. I'm not going to read what's on the screen here. In fact, I'd love for you to hop off mute and share a little bit about yourselves, how you came to learn about Power to Fly, and what you're excited to share with us today.
Absolutely. My name's Taylor, and I'm currently the head of marketing for Rapidly. I have been a Power to Fly member for probably a few years now. I have a talent profile on here, and as well, I do attend quite a few of the webinars and rewatch a lot of them, as they're amazing for women who are looking to pivot in their careers. Prior to Rapidly, I did have my own career pivots as an elementary school teacher, fashion photographer, and now I do create all of the educational content and tax literacy content for our taxpayers, for our accountants on our platform. So I'm definitely coming to this talk from that lens. I do a lot of research, finances, taxes for the taxpayer, and as well, this was my first year filing my taxes myself, so I'm very proud of that, and I'm definitely, just coming to this talk from that side of my experience.
Awesome. Thank you, Taylor, for sharing that. Evan, I'll pass the mic to you. Let us know a little bit about yourself, how you came to learn about Power to Fly, and what you're excited to share with us today as well.
Absolutely. My background is in tax and accounting. I got a JD and an LLM, which is a focus on tax law from Georgetown. Worked at boutique tax firms, and then pivoted more towards the technology space, which is how I came to Rapidly, met Taylor, and learned about Power to Fly. So I'm excited to be here today to talk about taxes and talk about sort of strategies for executing on that. certainly Taylor knows a lot, and I know some things too, but it doesn't mean we know everything. So you can definitely stump us, but we'll try and provide some resources and some guidance where we can't provide a specific answer.
Awesome. Thank you. And before the end of this chat, don't worry, we'll send folks your way so they can connect with you offline and they can continue asking questions there. But I just want to use that as an opportunity to say, we would love for you all to write in the general chat box and let us know what questions you have. With that said, I know that you all are going to go over some specific themes today. So I'll pass the mic to you all to go over some quick themes that you plan to cover.
We are planning to cover actionable steps that taxpayers can take for their taxes and finances, especially when they're starting a new job or maybe have some other kind of life stage change that will change their tax filing status, as well as having a sense of ownership over your tax returns and feeling tax literate, and a solid understanding of how you can prepare and prep for your tax season and feel really confident as we're in the middle of it this year.
Awesome. Great. So I'll move on to this next slide as well, because I know you all are offering something special for our Power to Fly attendees. I'll pass the mic back to you all so you can go over that.
Yes, we're really excited to offer 20% off of your tax service this year with the code POWER20 at checkout. So you can visit us at rapidly.co, click sign up in the upper right-hand corner, and then you can create your account, submit a tax prep request, and then match with your service provider and get your taxes done safely from home while we're still having some shelter-in-place orders currently.
Great. So as I mentioned before, when I was going over the housekeeping rules, I put all of the questions that you all have submitted previously in the Q&A chat box here. And I just want to give a quick shout out to let our guest speakers know where folks are calling from and those of you who are rewatching later. So again, I'm calling from Patagonia. Taylor's calling from Arizona. We've got Evan calling from San Francisco. We've also got Arizona representing. We've got Berlin. We've got Buenos Aires, Argentina, Spain. Okay, so if you're just joining us, go ahead and drop in the chat box. Let us know where you're calling from, and I'll give you a shout out a little later. Until then, I'm going to move on to the Q&A slot here. Again, feel free to upvote the questions that you're really interested in covering for this next hour. We'll try to go through all of them, but again, we do want to get some live answers as well, so you can write that in the general chat. Let's start with this first question here. So when is the best time to file? Closer to deadline or beginning in January? What's the basic aspects we should take into consideration entering tax season?
I think, in my experience this year, I filed right on the first date of the IRS accepting tax returns. And so that was February 12th. And I, received, oh my gosh, I'm so sorry, my puppy.
Don't worry, that's one of the things that we talk about during these chats is, that we need to know the human behind, the technology. So dogs walk past, maybe cats and children and things like that. So just it brings the human to the screen. Thank you, Taylor.
Thank you so much. So I received my tax refunds, federal and state, via direct deposit within a week, because I filed so early. And so that's one advantage of filing early. There's not necessarily an advantage of filing closer to the deadline. And in years where I have filed later in the tax season, it does take, up to 3 weeks actually to get your tax refund, and it will take longer. And then as well, this is such a great question, I think, to start off and introduce tax literacy. I think one of the most important things when you're entering tax season, before the new tax year even begins, is gathering up your documents, gathering up your receipts, making sure you have your personal documents like your passport, your social security card, your birth certificate, driver's license, all of that in one place. Making sure you have your W-2s all gathered, or 1099 forms, receipts, and then also last year's tax return, just in case you need that as well.
Awesome. And I know that both of you are going to be passing the mic back and forth to respond to some of these questions. But Evan, I wanted to ask, did you want to chime in on anything there?
Yeah, I think Taylor hits on a lot of the important things of having your documents organized and together. And if you have that, the process is going to go smoothly. to second why a reason to file early, the IRS has your money and they're not paying you interest on it. So you get in, file as soon as you can, particularly if you're getting a refund. If you're not expecting to get a refund or you don't know what's going to happen, then knowledge is power, and filling out that return, seeing where you stand, is going to let you make decisions about the next steps moving forward if you do end up owing, and you don't need to schedule a payment plan or need to think about how to get those funds.
Well said. I love that you put it very frank like that. The IRS has your money, so, and you're not getting interest on that. So, and knowledge is power. I love that you're chiming in on that as well. Let's move on to this next question that has been upvoted here. What taxes should we consider when living abroad?
I know we've got a surprisingly diverse audience, and there's no way that I know what the different taxes people are paying in Berlin or in Spain or in Patagonia. However, generally, if you are earning income in those foreign countries, you can exclude up to $108,000 of foreign earned income from U.S. taxes. So that's designed to simplify that tax component. That does not exempt you from filing a U.S. tax return. Many people who live abroad do tend to, well, we certainly said file early, get a refund. A lot of people who are living abroad are eligible for an automatic extension and choose to file additional extensions beyond that, particularly if you need to file the return in the country where you're living first, and then that may become an important document for preparing your U.S. tax return. So those are some of the core things there. The U.S. has tax treaties with lots of other countries that govern some more complex tax situations. So you can look at that as a source of truth. Sort of the U.S.-Australia tax treaty really does govern pretty much everything that involves taxes between the U.S. and Australia, and there's one of those with most other countries. And those are easy to Google for. You can just U.S. X country tax.
All right. Thank you for that, Evan. And I know, yes, we are calling from several places in the world. So if you have any kind of insider scoop, I know that as I've been living in Buenos Aires, it's really about like joining that Facebook group or like getting to know certain people who've been here for a long time. And then you get to learn, certain tips and tricks there. So if I know we've got folks calling in from Berlin and Spain and Argentina, if you have anything that you've seen that has been working for you in your specific country, you can write that in the general chat and maybe we can announce that too. So maybe folks who are listening later can get in on that information. All right, so let's move on to this next question here. Okay, let's talk about the elephant in the room, COVID. A lot of things have been changing, and specifically, this is pertaining to the states. What should those that didn't receive their stimulus package do? This has been a question that has been upvoted.
This is a very important, very timely question. I'm really happy that people ask this and want to know about it this year. It's very important. So this year when I was filing my own tax return, there's actually an additional question on your 1040 form for individual taxpayers that is asking how much of a stimulus payment you received last year. So you basically put an amount out of, I believe, $1,800 was the total, $1,200 and $600 were the two payments. And so if you are missing your stimulus payment, you are able to write it there, and then the IRS can reissue it to your new bank account information or your new address that you're filing.
Awesome. Thank you for that, Taylor. Okay, so let's move on to this next question that is still very timely. Do you have to include the relief help and the unemployment benefits as income for 2020?
Yes, in a word. Unemployment benefits are taxable at the federal level and taxable in most states. But I think Taylor's got some advice on kind of filling out some of that paperwork.
Yes, so even though I'm still kind of early in my career, you know, things happen. I've personally been on unemployment before, as you know, a previous company went out of business completely. So during that time, I've personally filled out these forms for myself. And when I was filling out those forms, they do give you the option to deduct 10% for federal withholding out of your unemployment. And I would recommend doing that because at the end of the year, you don't want to surprisingly owe that extra money instead of getting a refund to either the state or federal. But that 10% federal withholding is an option. I would definitely recommend doing that just to cover yourself and not unexpectedly owe something later.
Awesome. Thank you for that, Taylor. Okay, so this next question that has been upvoted a couple of times has to do with protecting our privacy. So how can we protect our privacy while using tax prep products?
Yeah, I know Evan definitely has some further thoughts about compliance, security. That's a lot of what Evan does at our company day to day is handling that. But I think for myself, you know, just in general, from a personal finance standpoint, it's really good to have some kind of a credit monitoring. You can make sure there's no identity theft, no fraud going on. There are obviously, you know, security breaches that happen with accounts. Could be an IRS account, could be any kind of account, but it's very good to have something even simple or free like Credit Karma, where you can check and make sure no one's creating accounts in your name.
Yeah, those are great resources. On the tax side, I think it's being thoughtful about how are you storing this information that you're getting. Trying not to use a public computer, doing it on your own computer. How are you sharing it with a tax preparer or with others? You know, that you don't want to be texting people photos of your W-2 if you can avoid it. Things that enhance security there, not sending your social security number in the subject line of an email. Just trying to use best practices and looking for and choosing to work with tax preparers who sort of support these type of processes and have the processes in place for secure document upload and that are willing and able to answer any questions or concerns that you have there as well.
Great. Thank you for that. Okay, so next question here that's been upvoted. When finishing and starting a new job, what taxation aspects should we take into consideration?
This is a great question. So I do think that very important is, again, having your documents ready. Whenever you're starting a new job, you are having to provide some kind of proof of identity, whether it is a passport, whether it is your social security card. So just having all of that ready and stored in one place, again, and not having to search for it or try to request a replacement when you start a new job. As well, if you're kind of in between jobs in the United States, there are tax penalties for gaps in healthcare coverage. I think California has done away with that, but previous years there was a penalty on your tax return for having a gap in coverage of more than 3 months. You do want to make sure that you have COBRA coverage or, you know, the healthcare marketplace coverage if possible to avoid that kind of a penalty. And for me, in my experience, in Arizona, we have the A4 form for our state tax withholding, and you're choosing your own withholding amount. And there's not, if you don't select anything, it's 2.7%, but there's options between 0.8% and 5.4%. And you basically have to go and figure out how much do I think I'm going to earn, and then, do some kind of a calculator that's going to tell you how much you're going to be taxed at those different levels. So making sure you're prepared with that if you live in a state that has variable withholding is very important as well.
All right, let's move on to this next question about small business taxes. So any new small business tax changes?
There are quite a few, and for the expedience of time, we're not going to cover all of them today. Some of the biggest sort of things that people are talking about in small business tax world are Paycheck Protection Plan loans, and those are fully forgivable if they're used for rent or mortgage or utilities or paying salary. So if you got a PPP loan and used it appropriately, it's forgivable. That forgiveness is not income, and the expenses that you paid for using that loan are fully deductible on your tax return. So that's a really strong benefit there. There's some other programs around payroll taxes designed for sort of more medium-sized employers to ensure that there's a credit against paid sick leave and paid family leave. Starting on January 1st, there's a new 100% deductibility for meals to try and encourage restaurant use. We've seen some new depreciation schedules. Generally, depreciation refers to when you purchase an asset, how long you can deduct that over. Those schedules are getting more favorable for everything except luxury cars. The IRS has caught on that business owners are buying fancy cars and trying to take deductions on those, so they've limited some of those. That's certainly not everything, but hopefully that covers some of the big trends.
Yes, and to whoever asked this question, feel free to let me know in the general chat that you want to continue asking this question or maybe dive in deeper with Evan and Taylor. Just write a +1 in the chat box and I will get you to where you can share your voice here. But that seems pretty thorough. Evan, again, if you've got more tips and tricks concerning small businesses, as I'm sure a lot of folks are, actually what I've learned throughout 2020 by hosting these chats is that more folks are creating their own businesses. So I'm sure that this is a very important question for our Power to Fly listeners. So if that was your question that you submitted and you want our guest speakers to dive in deeper, just let us know in the general chat and we'll get you on live with us. Until then, I'll move on to this next question here. So I started my business last year and I just got my first client. Also, I moved from Kansas to South Carolina this past year. My business is currently filed as an LLC in Kansas. I need to switch it to South Carolina. What do I need to do in terms of my 2020 taxes?
Yes, again, great question. I think there's quite a few great circumstances in here that show just the complexity of tax returns. So one thing I did want to mention is that your LLC is not a tax filing status. It's actually just a legal entity that separates your personal income and your personal assets from the business assets. So it's separating those two, and it won't, you're not going to be liable personally with your personal assets for anything legal that goes on with your business. So that's an LLC is great to have, but it doesn't actually affect your tax filing status. One thing that you can do is, you can choose to register and file as a corporation of some sort. Otherwise, if you're a sole proprietorship or, a partnership, you're going to just have your business income as self-employment income on your 1040. And another thing I did want to mention is if you're living part year between two states, I had that happen last year, moved and relocated from San Francisco to Phoenix, you are going to need to either yourself or with your tax preparer calculate what percentage of your income was in which state, depending on how long you worked. So that can be a more complex type of return of filing multiple state returns and allocating that as well. And I know Evan as well has great insights on this too.
Yeah, I think Taylor and I were both really excited about this question because it touches on a few things. So some of the one to emphasize here, sort of the importance in starting a new business like that of getting best practices going early on tracking income and expenses in your records. So making sure you've got a separate bank account set up for that business. Go ahead and pick an accounting software. I don't care which accounting software you pick. QuickBooks, Wave, Xero, they all are going to work for an early stage business. And they're all going to help you track those income and expense items so that when you get to the end of the year, things go smoothly and easily. And yeah, I think those are the core things.
Awesome. Thank you both for that thorough response. I have a live question here from Rosa, and that is pretty lengthy. So Rosa, if I don't read this correctly, just feel free to hop off mute. Let me know if you want to come off mute and ask for yourself. But this has to do with foreign tax credit. If you have already paid taxes for renting a property abroad when filing in the US, I understand we have to go through foreign tax credit, right? The person who filed my taxes in the US in the past filed deducting the deductible expenses from the rental income, but I had already paid taxes for this abroad, and there's a treaty between the US and Spain for this. So Evan and Taylor, let me know if that is clear. If not, Rose, I'm going to invite you to hop off of mute and continue to voice this question.
From a kind of surface level standpoint, from my understanding, you are going to still file your U.S. return, report that all of that income, and then you're also going to report what taxes you've paid in another country. And Evan can definitely answer this more in detail.
I'm going to second what Taylor said there. So it seems like the U.S. tax preparer is doing the right thing. You'd file a Schedule E or the relevant schedules, and then you have foreign income, you have foreign tax paid, and you get a credit for that. So making sure that you're providing your tax preparer with sort of your foreign tax documentation that shows how much tax you paid for that rental property or the income on that rental property.
Awesome. Great. So thank you for that, Rosa. And I know that you are, not in this situation alone. I hear my friends talking about this as well, who are kind of, world travelers and they work remotely. So I hope that answers a question for those who are listening live as well. All right, so let's move on to the next question here. We've got just about half an hour left, so I do invite you all to continue to continue to write your questions here in the Q&A slot, or to continue to add your comments in the general chat. So we have a question here from Nicole. How will the stimulus checks affect our taxes?
That's a great question. So it's not taxable. Those are like tax-free. You get to keep the money. As well, the IRS and the Treasury, they did announce that if you, for some reason, received an overpayment, you don't have to try to. You would just keep that, and there's no penalty against you if they accidentally sent you your stimulus check twice via direct deposit or something like that.
Awesome. Evan, did you want to chime in on that? No, Taylor has all the answers there. As we talked about earlier, with stimulus checks, there isn't a portion of the tax return where you can report that, and filing your tax return is a good thing to make sure that process is moving forward.
Awesome. Okay, so I'm going to go through the rest of these questions that have been submitted offline. And if anyone wants to upvote these, feel free to do so, and I will prioritize that question. So let's move on with this first one. Do I need to copy what's shown on my HSA tax document on the 1040 or state tax forms?
Best practice here would be yes. You're getting those HSA forms hopefully via a secure document portal or in the mail, and you enter that information in the applicable section when preparing your tax return. Assuming everything went smoothly, if you didn't do this, the sky probably wouldn't fall. The IRS actually does know, if you get a form in the mail, the IRS got the other copy of that form. So they know how much you put in your HSA and how much was distributed from it. And if they have reason to believe that there was either an over contribution or a distribution that wasn't correlated with the appropriate expense, you'll be hearing from them. So filling that out on your side is a way to get in front of that.
Awesome. Thank you for going over these best practices, Evan. I love that you're speaking our language here so that people can know this is what you should do, so you can make sure you're taking care of yourself. All right, so let's move on to this next question here. I would like to know more on updating the DE4 form and withholding information.
I think, going off of my earlier response about like the A4, it's important to educate yourself on any of the withholding, laws within your state. So the DE4 is the California withholding form. Very important to make sure that you're filling out those boxes correctly and, understanding how much you are projected to make for the year and making sure you're putting the right filing status and all of that. And Evan can speak more about filling out that specific form too.
Absolutely. So there's a federal withholding form and most states have withholding forms. The biggest driver of that withholding for most people is going to be the number of dependents. For most people, dependents are your children who live with you. That's not always the case, but in general, the neighbor who's your child's best friend who comes over every afternoon and eats Cheetos and sleeps over once a week is not your dependent, no matter how many Cheetos that person eats. So there's certainly some complex situations there. And then if you are itemizing deductions, there's going to be a schedule, sort of a second page. So that's often people who own a home and have deductions there would be itemizing. And you can fill out that schedule. But if you don't itemize, you don't need to fill out that schedule. If you do itemize and you don't fill out that schedule, you will be over withheld. That is, you will pay more in tax during the year than you'd like to, which isn't the worst thing in the world. It just means the IRS has your money and they're not paying you interest on it.
I love that. I'm going to put that on a t-shirt to remind everyone, also because it's the second time you said it and it's so clear, just a clear reminder to make sure you're getting, what you are owed. Okay, so let's pivot back to what's happening now with the pandemic. Could you share information regarding paying unemployment taxes on pandemic unemployment payments?
Yes, so I know that there was previously the additional $6 a week of supplemental unemployment insurance, and that's now been, I believe, changed to $300 or $400, I believe. And those supplements, those are still going to come as your state unemployment. So that's all going to be lumped together. And I would still recommend the same thing that I recommended earlier, which is checking that box with the option of withholding 10% for federal returns. And also, before the year ends, making sure that you know if it's going to be taxed or not in your state, so that you can prepare to either owe tax or get a refund.
Awesome. Evan, did you want to chime in? I see you leaning forward. Okay, perfect. Let's move on to this next question. I was married for 29 years and I am now divorced. My 2 sons are living with me. This year is the first year that I'll be filing individual taxes, so I'm interested in anything I can.
So it seems like the person answering that question is likely to be in the head of household filing status. And stepping back a minute, filing status is determined by the IRS as to the reality on December 31st. So if you are married on December 31st, you are married. If you are divorced on December 31st, you are either single or head of household. And head of household refers to somebody who is single with dependents. And that's sort of the most favorable tax filing status that the IRS has created in order to provide some types of relief to folks who are otherwise in a potentially challenging situation.
Awesome. Thank you for that, Evan. And thank you for submitting that question, as I know that, you know, that a lot of people are going through that same situation. I personally know a couple of folks, and it can be confusing. So I really appreciate the transparency behind that question. Okay, so let's move on to this next question here. Is it better to bring someone on as an employee or an independent contractor? What should you think about to make that determination? I have started my accounting qualification recently, and do you have any recommendations? Which finance systems should I learn first? So I'd love to hear also you all talk about just how a lot of roles are moving remote now, and so to speak on just how folks are hiring remotely. Or, if they're starting a small business as well, just because often at Power to Fly, we do talk about pivoting careers or moving from, in office to remote. And of course, with COVID, we are moving remote now. So feel free to dive in as deep as you'd like to that question.
I think regarding the hiring remote, one thing that's very important for someone who is receiving a 1099 or a W-2 is making sure that if you're traveling around because you're like a digital nomad or you're just a remote worker, you may owe taxes in a different state that you don't live in if you're working there. For a certain amount of days. In California, that's referred to as California source income. So one example that I heard is if a basketball player is playing a game in California, they now owe California income tax on that specific game because they were performing the work in that state. So that's something very important as either an employee or a contractor to take into account when you're working remotely. And Evan has way more to talk about on, employee versus contractor.
Absolutely. I don't know if I have way more, but certainly there's a common law distinction between, or definition of what an employee is. And there are 2 elements to that. When you have someone who you're paying for work and you direct what they do and how they do it, that person is going to be an employee. On the flip side, if you're hiring somebody to do something and you're not providing instruction or details as to sort of how they perform that task, rather they control that and they're free to control it, that person's more likely to be a contractor. Going back to some of the things, Marielle, you touched on at the beginning of this in terms of sort of just how we interact with people in our world, that employee contractor distinction is one, I think, where clarity with the person you're hiring and some honesty on both parties about how much direction and supervision is this person going to receive, and do they need to receive to successfully execute on the task, might lead you to the right decision there. And I know, Taylor, we sort of want to circle back on that accounting question, maybe?
Yeah, I did also want to add that regarding the employee versus contractor, when you are in the position of like business owner or the person who is hiring someone, you do also want to take into account if you have an employee, you may be responsible for providing them health insurance, health benefits, other benefits, and as well, you're going to need for sure a payroll system set up that's going to take taxes out of their payments. For a contractor, they're going to be liable for those, self-employment taxes, and that would normally be taken out by the employer and withheld at the end of the year. So that's also an important distinction to make of, having an employee, it is a little bit more of a liability for someone who is hiring. Yeah, but that's not to say that, having an employee is also very important. So, and regarding the accounting, systems to use, I think QuickBooks is one that almost every small business owner, like they're using just because it's very easy to learn. There's a lot of, educational content around it. As well as some, other medium-sized businesses might use NetSuite, but a large business would probably have like a customized tool that they've, built themselves internally. But QuickBooks is definitely very common, easy to learn. And Evan had also mentioned Wave earlier, very easy to send out invoices as well.
Awesome. Thank you both for piggybacking on that question. I know that it's very important for us to, get as thorough as we can, and especially, during these crazy times. So I appreciate that response. Rosa here asks, regarding the deadline, is there any earlier deadline than April 15th for filing?
Evan, you can correct me if I'm wrong, but as far as I'm aware, April 15th is typically, the earliest filing deadline for a taxpayer. And then, you can also file an extension and, be able to file your taxes after that if you, have a reason to do that.
Yeah, the only exception would be if you have a partnership. Your partners need to use that documentation to file their own tax returns. So consistent with that, the filing deadline is March 15th. And you're going to hear about it from your other partners if you haven't sent them those K-1s as well, because everybody's going to need those.
Awesome. So we have a couple of new questions here in the Q&A section here. So I received my permanent residency green card a year ago. What are the guidelines for moving money from savings from my overseas accounts to the US? Are there tax implications? Am I also required to report on the savings to the IRS and or the Treasury? How do I navigate?
I'll try my best at this one. So there's definitely complexity here. This is sort of goes beyond tax liability to start talking about Foreign Account Act or FACTA reporting. So this is something that sort of self-prep programs and maybe even many tax preparers don't have a lot of specialization in. The IRS has become, over the last 10 years, very interested in sort of Swiss bank account type problems. That's created a sort of a burden for a lot of more normal people who wished they had large overseas funds, but maybe just have a checking account in a foreign country. There are some de minimis carve-outs on that. I think it might be $10,000, but I'm not certain. And there is a specific factor reporting form that you would use. And if you have a tax preparer, they're going to be able to help you with that.
Awesome. Thank you for that that question. Pretty meaty there. Thank you, Evan, for taking a crack at that. And whoever asked this question, I would encourage you all to connect with Evan and Taylor. I will present the last slide there so you can take advantage of all the great tools that they have there, that they're offering our Power to Fly listeners now. So let's move on to this next question here. And we've got just about a little over 10 more minutes just so that folks know. So if you have a question, now's your time to shine. If you want to come off mute, again, now's your time to shine. Let's move on to this next question here. If a nonprofit organization has not approved, the nonprofit organization was not approved by the IRS, can it file as a nonprofit organization using Form 990? And I hope that was a clear question there, but let me know if I need to ping that person to be more clear.
I frankly don't know. If you haven't been approved as a nonprofit organization, that becomes a question of what is the organization? Was it approved, or was it a Schedule C for-profit corporation, in which case it should be filing a Form 1120. If you're conducting activities that where there's revenue coming in and expenses going out, that would be something that you reflect on your individual tax return. A lot of people get around this type of problem by using an online service, of which there are many, where you sort of become a sub-entity of an existing established nonprofit. And there's several different online services that offer this. And I think with a little Googling, you'll find quite a few different options there.
Awesome. Thank you for that, Evan. Okay, so let's move on to this next question here. A person who lives overseas all the time and sets up a business in New Mexico and has its own EIN, does he or she need to pay income or state tax?
Yes. So you'll definitely have to, file your return, as we mentioned earlier, and you will report that both to the state of New Mexico if your activities are happening in New Mexico, and to the federal government. And I think Evan can probably speak more on the, aspect of the different types of companies and maybe there's a designation. Evan, you can answer this, of whether it's like an online company that has the EIN in New Mexico versus a physical company where people are doing physical work, or like a retail shop in New Mexico. So that would probably be classified differently.
I think those are important questions. Also stated in the question, it said a person, but I'm going to go ahead and assume that it is a U.S. person. If it is a non-U.S. person or a non-U.S. business, they wouldn't necessarily have that tax liability in the U.S. or in New Mexico. Rather, it would only relate to the actual work that was done in New Mexico. In the basketball example, Taylor, the basketball games, they showed up and played in New Mexico. But if that is a U.S. person and otherwise a resident of New Mexico. And quickly, residency is where you live and plan to continue living. So if you live somewhere, it's your home, but you are on the road for work 364 days a year, you can still be a resident of New Mexico. So hopefully that informs.
Awesome. Thank you all so much for diving in deep on these questions. We've got about 8 minutes left. So I would love to just share my screen again so that you all can go over what you all are offering our Power to Fly attendees and just speak a little bit more about Rapidly, what you all are excited to share about what you're working on today, or maybe, just kind of more tips and tricks that maybe we didn't touch on during this live Q&A. Feel free to take your time there.
Yes, so we're really excited again to offer this 20% off of your tax service with the code POWER20 to all of the Power to Fly attendees. We're really excited to offer this to all of you, and thank you again for attending. So in Rapidly, you are able to match with a tax and accounting provider. So we are able to accommodate both taxpayers, no matter the filing status, as well as business need accounting help on an ongoing basis, or business tax prep. So there are specialists on our platform who are able to help you with any tax related service under those umbrellas. And very simple process. You go in, create your account, submit your request, and then match with your service provider. And all of our service providers have their credentials certified through us, either as CPA, enrolled agent, and they do have their certifications, and most of them on average are having over 10 years of experience, I would say. So it's very exciting to get to match these people together on both sides of the marketplace. As far as what I work on, I would highly recommend signing up for a Rapidly account. You will get our emails that I send out. A lot of that is tax literacy, tax education, and content. You'll get updated about new blog posts on our website. And as well, follow us on Instagram, LinkedIn, Twitter. We post a lot of tax season tips. So we recently did a series that was all about understanding tax deductions, tax credits, and your adjusted gross income, as well as how that's all calculated to give you either a refund or a tax debt on your return. So again, lots of good tips that I work on to help to educate our users.
Awesome. Thank you for sharing that. And Evan, did you want to add anything else before we wrap up?
Just that the content Taylor and her team produce are definitely one of the highlights of the Rapidly platform. And when you're using that platform, there's a tool to message with tax professionals, so you can shoot a few people a message, see who you kind of vibe with, and go from there.
Love that model, and I'm excited to share as well that I know might be looking for just a new way, a refreshing way. I love that the way that you all are explaining how to be mindful, how to practice or the best practice highlights that you were mentioning, Evan. So I'm definitely going to pass Rapidly on to friends of mine. I'm going to check out the content, Taylor, that you're working on. And I just want to say thank you. Oh, wait, we have a question here. What is your Instagram handle? What are your social handles so people can find you all?
Yes, so I think on every platform we're at Rapidly Inc., Rapidly, and then INC at the end.
Awesome. Great. So thank you everyone who's joined us today for this live conversation. Thank you, Taylor and Evan, and enjoy the rest of your week. We'll see you on the next chat.
Thank you so much.
So.
Bye.